morning and welcome, Patriot Radio News Hour. Joe and Jason on this Tuesday, and I hope it finds you well out there. We got all kinds of stuff to talk about today. Well, and every day in the year of chaos, how close are we to World War III? In case you missed it, the Biden administration and its infinite wisdom of, well, let's face it, war is good. Just ask the military-industrial complex, as we allowed for the very first time our long-range missiles to be used deep inside Russian territory. That happened last night. They launched, I want to say it was 6 missiles into Russia. Of course, that didn't go over very well. There's shock, right? Shocker there. And now the threat, apparently, from the Russians that nuclear war is now on the table. So, yeah, that's always great. It's always great on a Tuesday. It's Tuesday. You're like, Monday, everyone hates Monday. I hate Monday, right? You got to go back to work, right? You got to get into the swing of things, and, there's always seems to be some kind of, Monday drama you got to deal with. You get home, you're like, okay, man, all right, I survived Monday. Tuesday's going to be a better day. Right, you wake up, and next thing you know, Jason, whether, and again, we don't know, right? We're hoping it's just a idle threat, right? Saying it but not really meaning it. But here we are, one step closer in the year of chaos. I mean, anything can happen this year, right? We don't know, but I will say this. It's something where the longer this goes, and I remember when this whole thing first started, and as all of you know, right, not a big fan of this Russian-Ukraine war. It didn't need to happen. They don't need to be a part of NATO. They've never needed to be a part of NATO. It's quite honestly, let's face it, in the terms of the world, Ukraine was mostly known for cyber hacking and an arms dealer, a bad arms dealer. I mean, that's right. They had some wheat. They had some wheat. And I guess apparently a bunch of labs we weren't supposed to know about. But outside of that, that was it, and hardly seems worth World War III. But Jason, that's what's on the agenda. This is why we dubbed it the year of chaos. Granted, I didn't know that was going to happen, but yeah. So when you're looking at the markets today and you're wondering, gosh, what happened? That's what happened.
Yeah, and whether you believe what the news is shoveling or not, if the news is shoveling it, you better believe most people are believing it. And so a little bit of fear factor rising up. There's going to obviously be a little bit of pushback to the new president, but I don't think the fear spigot ever gets shut off, does it, Joe? And sometimes they ramp it up, and we'll see. We'll see if this is some legit thing where Ukraine is firing United States weapons into Russia, and if there's going to be some sort of reaction. Well, I'm sure if there's a reaction, we'll hear about it.
Yes. Well, let me tell you, I know this. I hope and pray that it's not a nuclear reaction. We'll have to wait and see what happens. Our toll-free number, 800-951-0592. The website at allamericangold.com. And I'll just tell you this. Get your dialing fingers ready. We have another one of these spectacular sales. This one's going to be in the silver market. a silver spectacular sale, being able to buy silver right near spot, which is impossible seemingly anymore. But we're going to have it ready. We're going to have it for you, so get ready to download. Remember, I'm going to go over this. Well, we do this once in a while because you never know. We've been in business, but here, next year, 2025 will be 29 years. 29 years. You never know who's going to walk in the door. And we had a situation where that happened yesterday, and we were able to buy a good amount of different things that we're going to be able to pass the savings on to all of you. Just remember, we'll get to you in the order that you call. I've got all the girls here so we can go pretty quickly, but when we're out, we're out. And it is what it is, but be ready. When I give out the number, I'll give you the items. Be ready to go. That number again, in case you want to write it down, 800-951-0592. That is the toll-free number. We did get some economic data out. We had housing starts and building permits, and they were way off. And probably rightfully so, right? Let's face it, it's too expensive, right? The housing market, the amount of homes built but not sold, right? We're way, way up there. Building permits dropping, housing starts dropping. The second straight month in a row for that. When we get back, a silver spectacular sale and an interesting earnings from Lowe's today. We're going to go over that. We'll be right back. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Tuesday. Remember back at school? I don't know if they do. I don't think they do. They used to do the nuclear bomb drills, remember? Yeah, listen, getting under the desk or hiding out in the cellar, yeah, that's probably not going to do any, not probably, it's not going to do any good, but the thought of doing something, I guess, is really what matters. A quick look in at the markets. Right now, the Dow is down just under 200 points. It's been down about 300, almost 400 points earlier today. The S&P is flat. The Nasdaq's up a little bit. The 10-year note we are seeing, now this is a flight to safety. The 10-year note down to 4.37. We'll see how long that lasts. We'll take it. Not a really big flight, but at least something. Some people saying, okay, just in case. That's what we're going to do. Obviously, gold continuing its march again, continuing its recovery. Up another $15 today, 27 now for gold. Silver flat right now, $31.10. We keep talking about diversification, don't we? We do. How important it is. Think about today. Now, it hasn't happened. I hope it doesn't happen. But if the Russians decided to drop a small nuclear device on Kyiv, or Kiev as I used to know it growing up, we'd probably be facing a much different environment, wouldn't we? Right? That would literally change the face of the world. And this is why we keep telling you that you need to be more diversified than you've ever been. Because that's just one thing. That's a horrible thing. But there's so many others. Right? How many more bankers do we really need to listen to? Tell us, well, we're one We're one jolt away. We're one bad day away from the bond market imploding. You know these banks, listen, these banks, they're sitting on so much unrealized losses, and they changed the rules. This is what they love to do. Well, we'll just change the rules. We'll let them just carry all kinds of unrealized losses on their balance sheet. Why do you think Warren Buffett's been dumping Bank of America? Because he knows how to do math. He knows how to do math. We've got budget deficits that are so out of control. We've got war drums beating, trade wars brewing, BRICS, and everything else, right? De-dollarization, digital currencies, right? You name it. You need to be prepared. We keep talking, especially the people that maybe you're close to retirement, you're in retirement. You shouldn't be risking what's going on in these markets like this. You shouldn't have to do it. You got a lot of money sitting in your bank. Why? What a terrible, how sad is it that everybody knows it. What a terrible investment that is. Terrible idea. You got these big IRAs. Maybe you did it right. Hey, I worked hard. I played the politics right. Right? I climbed the ladder. My wife climbed the ladder. We lived within our means. Right? We've got a big IRA. Listen, you need to be calling us, getting some of that into gold and silver. You need to check out our friends over at Refi. Right, up to 10.25% fixed rate of return, not correlated to Wall Street. You can use it as income. What a big man! How many people out there are like, man, I wish I had some income in Social Security besides Social Security. Right? Jason's like, yeah, everybody, check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24, 888-973-3924. Having said that, as I told you, we're getting a great opportunity in silver today. There's not a single thing we're going to be selling for more than $33.56 an ounce. So nothing we're going to sell today is, less than $2.50 over spot. Everything we're going to sell. Most of it even less. I'll start off with this one. I have 7 rolls of Canadian silver maple leafs. Now, the Canadians, they're kind of weird. They're a little different. They have really cool-looking coins, by the way. Super cool. And they take a lot of pride in their coins. They do. But they put 25 ounces of silver in a roll. Here in the U.S., we do silver, we put 20. So this is 25 ounces. I only have 7 rolls. That's it. 7 rolls. They're $800. And these coins are tight. What do I mean? They're not toned. They're not nothing. They look brand spanking new. I've got 7 rolls. They're $800 a roll. That puts it at $32. Yeah, that's right. 85 cents over. That's below cost. We love below cost here. I've got 7 rolls. Take it in. You can't buy rounds for that kind of a price. I mean, what are I got it? Let me go look. $710 on a roll of rounds. That's $35.50. On a roll of rounds. This is Canadian government hallmarked at $32. Can't beat it. Nobody can do it. We can. I've got 20 rolls of $50. Now, we ran $50 on sale at $2.50. I was like, what a great deal. So I got 20 rolls. $240. That's $33.50. $33.56 an ounce for U.S. government Hallmark. But you're like, well, gosh, I'm going to pay a little less than that. I've got 20 rolls of quarters and 50 rolls of dimes. The quarters, $2.35 a roll. That's $32.86. And the dimes, $117.50. I got 50 rolls of those. And again, $32.86. All of those, you're not buying them cheaper anywhere. And by the way, just so you know, we don't take the mercury dimes out. We don't take the standing quarters out. We don't sift through. You're going to get a great mix of stuff. 800-951-0592. And by the way, Phoenix and Colorado, you guys are on the same time now. So Phoenix, a bunch of our Silver Spectaculars this summer, when the clocks were different, they were an hour later. They would miss out. Phoenix, this is open. You guys got your opportunity to jump in here and take care of business. But I do want to point this out. Okay, we got 2 lines open. So if you want to get in the order that you called, 800-951-0592. And again, the ridiculous silver sale. Rolls of silver maple leafs. There's only 7 of them. Remember, there's 25 ounces in it. They're $800. And that's not even 85 cents over spot. That's incredible. And then we have 20 rolls of $50, 20 rolls of quarters, 20 rolls of dimes. The $50, $2.40, the quarters, $2.35, the dimes, $117.50. If it was me, this is just me, I'd probably buy the maple leafs first. Then I'm going at the $50 and the dimes and then the quarters. Why? Because the $50 are awesome. The dimes, if have the most fractional. That's just how I would do it. But I'd buy it all. That's what I would do. 800-951-0592. 19 still open. If you get voicemail, call back. Lows today. Now remember, we had the hurricanes, right? Home Depot said, hey, the hurricanes helped, yay. Lowe's said the same thing, but not enough. They're expecting U.S. same-store sales to decline by 3.5% year over year. 3.5%. Right? That's what they're expecting. Do you know what Lowe's stock has done this year? So think about this. Company comes out, says sales are falling, right? Even with all the higher prices, sales are falling. Their stock is up 22% for the year. And Jason, I think this is another thing that people have to understand in here. Yes, we know the Magnificent Seven. We got news out of Walmart today. Walmart's basically saying everybody in the country is shopping at Walmart because they're broke. They didn't say it like that, but that's what they said. But the stocks were like, okay, listen, business isn't great. And yet they're up 22%. This is why I think you're seeing guys like Warren Buffett, these big guys, they're dumping right now because they're like, okay, things aren't great. And obviously a lot of these stocks are puffed up, Jason. This is what happens when we print too much money.
Yeah, and there's not a lot of room with the Home Depots out there. The competition isn't good, right, Joe? There's Kmart didn't do too well when Walmart came around, right? So it's
right.
Lowe's seems to be the little brother when it comes to Home Depot. So it's not going to be good for them if they can't keep themselves priced into the market with things getting as tight as they are. So. Let's see how far Lowe's. What would happen if Lowe's went into bankruptcy, Joe? How severe would that be, or would that be absorbed pretty well? Do you think?
I think it would be absorbed pretty well. Somebody would loan those. And listen, don't get me wrong. They're not anywhere near bankruptcy. The point we're making, right? Yeah, right. That we know. That good point that we know of. Obviously, the housing and building permits number that we saw today, not helpful, but neither here nor there. It's really about value and risk, right? And this is the thing that people need to understand. When you're talking about Wall Street, you're talking about risk. When you look at the bond market's job is to price in risk, right? Why were yields falling today? Well, people got scared because apparently we want to continue to escalate war. Well, we're good at it. Let's face it, right? Who's the best at war? The U.S. We're the best. We're the best. Right? I mean, technically, we're at war with Russia without using our own troops yet, right? I mean, I guess that's the best thing we can say. And again, I'm just going to say this really quickly. All the lines are full right now. We'll get you in the order that you called. Just be patient. I apologize for that. When we get back, we're starting to hear talk from the Fed about the Trump administration. Got that coming up next. 800-951-0592. Things are going fast. We're down to the last couple of rolls of the silver maple leafs. That's 25 ounces of silver, $800. It's $32. I mean, silver can be $32 tomorrow. The way things are shaping up here. The half-dollar rolls, we're almost out of those as well, at $240, the quarters at $235, and the rolls of dimes at $117.50. Those quarters and dimes all the way down to $32.86. It's the cheapest in the country out there at 800-951-0592. We got 3 lines back open again. So lines are back open again. Get in here and get it done and walk away with a lot of cheap silver. We talked about silver demand. It is outrageous what is going on in the exchanges right now. We are going October was huge. November already. We're what? It's November 19th. And London is already saying they've shipped more silver. And this is a change, right? This isn't just the paper. This is physically people buying these silver contracts and saying, give it to me, send it to me. It's really picked up off the charts here. 800-951-0592. Jay Powell last week said he's not factoring in the potential effect of the Donald Trump economic policies because he said that we hadn't had enough specifics to be released yet. This week, things are starting to change. Powell now is saying that the tariff policies most widely referenced with the policy change in a general question. Neil Kashkari from the Minneapolis Fed said taxes on foreign-made goods might not have a long-lasting effect on the economy. So I want you to know how the Fed views this. A tariff, generally speaking, from an inflation perspective, we think of it as a one-time price increase. So, see, it's fine. Don't worry. It's just a one-time price increase. Well, isn't everything a one-time price increase until the next time? Well, that was a one-time thing. Oh, well, there's another one-time thing. Well, that's a one-time thing. So here's how listen how asinine his comments are. So if you have a 1% tariff, okay, first of all, who in their mind's talking about a 1% tariff? Nobody. You could think of it as a 1% increase in the price for those goods that are subjected to the tariff, but that by itself is not inflationary over the long run. Yeah, it's not inflationary. Right? Don't worry. It's just a one-time change in the price level. So this is how the Federal Reserve is going to be looking at the tariffs. It's not inflationary because it's just a one-time event. Now, it's a one-time event that adds another 15, 20, 30%. Who knows what the tariffs will be. Sounds pretty inflationary to me, but again, the response out of the Fed is that they're sitting here thinking that inflation was really low 6 years ago. The expectations were really low 6 years ago. We're now in a different situation, and they're starting now to talk about the debt levels. Kansas City Fed, Jeffrey Schmidt. Even if the government continues to run deficits, what is this guy talking about? We haven't run a government surplus really going back to the 70s. Now we had 2 fake years of surplus with Clinton, remember. So let's count that. We haven't run a budget surplus or non-deficit this millennial. And this guy says, well, even if they continue, of course they're going to continue. The Federal Reserve will keep inflation in check. Really? So this guy's saying, don't worry. We'll fix it. We'll be able to control inflation. Of course, he did say, I will say this, it won't come without a cost, Jason. The cost is the fact that everything is going to become superly controlled, right? You're going to have quantitative easing. I think what he was referring to is, Jason, I think their plan really is we're going to try to keep lowering rates, and then we're just going to buy the debts, because he said large fiscal deficits will not be inflationary because the Fed will do its job to achieve its inflation objectives. Though in doing so, ready for this? The outcome could be persistently higher interest rates. Uh-oh. Wait a minute. I just said that they were going to lower rates and start quantitative easing. Now all of a sudden they're like, well, yeah, that's probably true. But the outcome is going to be persistently higher interest rates. And Jason, this is kind of what we talked about when looking over the next 5 years. And listen, this was a good year. The year of chaos was a good year for the debt markets. Great year for gold and silver. Understand what they're saying. Hey, we're going to lie about inflation. Neil Kashkar, flat, we're just going to lie. So don't worry about that. And don't worry about government deficits. Because, listen, they know the deficits are going to explode. They've already exploded. 2 years ago, it was $1 trillion. It's now $2 trillion in 2 years. Now the question is going to be, is it going to be $3 trillion? Significantly higher rates. Uh-oh. Yeah. 800-951-0592. Only one line open again. Get in while you can. We'll be back after the break. 800-951-0592. We just cleared out the decks again. There's 2 rolls of Maple Leafs left. 2 at $800, $32. Remember, that's 25 ounces. The $half rolls, there's less than half of those left at $240. Same thing with the quarters at $235. The dime rolls, we had more dime rolls. We had 50 dime rolls, so we still got a good amount of dime rolls at $117.50. By the way, on that U.S. government hallmark silver, that utility silver, right, you're down to $32.86 at 800-951-0592. And very interesting comments coming out of the Federal Reserve guys. They're all at these, different conferences and, all these things where, let's face it, the mainstream media, they're not even telling you about it, right? You probably don't even know that they've been talking at all. But Jason, essentially letting it be known that Jamie Dimon has been right all along. That don't worry, the government debts, right, where the Fed is going to do its job, and according to the Fed themselves, their job is going to mean much higher interest rates. So imagine, now, the last 2 times we did quantitative easing, remember when the Fed added to its balance? The Fed had about $700 billion on its balance sheet in 2005. Why $700 billion? Because that was about what it took to run the Fed. And what do I mean by that? They need $700 billion? No. But the interest that they were earning on that $700 billion basically paid the Fed's tab. Well, when the financial crisis hit, everyone kind of realized real fast, well, how much is government debt worth? Not too much. Because you got to remember, the higher the yield, the less they pay. Right? Let's do, I'll keep it simple. Let's just say it was $100. Well, if the yield is 5%, they only gave $95 to get the 100, right? See, that's how it works. And the higher it goes, the less they pay. Which means what? The more we got to borrow. They first borrowed, went from $700 billion to $4 trillion. They borrowed all of that by creating money out of thin air, because the money didn't exist. But the interest that they paid was near zero. Then they tried quantitative tightening. Remember Janet Yellen, which ended very badly. And they sold off some of those treasuries, and they got into the high $3 trillion. It went from like $4.3 trillion to $3.8 trillion. And then all of a sudden they had to do it again. And they borrowed again, moved rates back to zero, ran it up to $9 trillion. Well, $8.9 trillion. So think about this. In 2005, there was $700 billion. By 2022, it was $9 trillion. Just out of nowhere. It's right now at $7 trillion, right? Because they've been selling it off again. Bank of America, they're the best at this. Mark Cuban is the best at it. Already said quantitative tightening's over in the next 90 to 120 days, and they're going to have to bring back quantitative easing. Jason, the difference, what I'm hearing the Fed say this time, they're going to have to be buying bonds at very high yields. They're not going to be able to borrow at near zero like they did in the past. This is not supposed to be how this thing works. This is another huge problem. But the Fed very quietly, because they keep saying, what you hear on the news every day, they're cutting in December, they're cutting. Actually, listen to what they say when they're not on TV. Interest rates are going to go a lot higher. And again, remember Jamie Dimon, there's no soft landing here. There's only one way to crush it. And I don't even know what that will look like. What would interest payments on, we're already at $36 trillion. We're going to be at 40 next year. I can't imagine having to pay 7, 8, 9, 10%. Jamie Dimon thinks it's going to be 8%. That would add almost $1.5 trillion to almost $2 trillion to the debt, just to have it doubling from where it is now. Got to remember, we're going to spend $1.6 trillion in interest next year at the rate we're at now. If it doubles, do the math. That'd be $3.2 trillion, right? $3.4 trillion. I mean, $3.5 trillion just in interest. Jason, everybody better really wake up to what's happening out there. I think it's going to be a huge shock to the system. But then again, if you got a big World War III event happening, I guess you could hide it all. Patriot Radio News Hour, final segment coming up. 800-951-0592. We got the shrapnel of the Silver Spectacular still remaining. $half rolls. Got a few of those at $2.40. We've got a few quarter rolls at $2.35. Some dime rolls at $117.50. We are out of the Maple Leafs. 800-951-0592. Patriot Radio News Hour. And Jason, it's very curious that when we sit there and we look at what the mainstream media is telling us, and of course they're saying, hey, rates are going to go down, the Fed's in rate cutting mode, and then this week they tell us, well, tariffs, it's just a one-time price increase. So, we're really, we're not going to say that's inflationary. And, the government spending, yeah, don't worry. We're going to do our job. And we're going to somehow keep inflation in check. And then they had to admit, well, how? How? Well, the rates are going to be a whole lot higher. That's how. This is why there's no soft landing. This is why we tell you to be diversified. This is why you need to get more exposure to gold and silver. 800-951-0592. Just kind of interesting, Jason, that you can get the truth. You just can't get it from watching the mainstream media, right? Because they're not going to say it. They're not going to tell you. That should have been the big headline of the day, right? That should have been the headline of the week. And instead, I mean, obviously, I get it, right? Are we on the precipice of World War III? Maybe. But Jason, the realities are the Fed, I think, is known for a very, very long time that there's really not a way out of this that is going to be, I guess, consumer friendly, for lack of a better term. Right at the end of the day, this is how fiat money works, and it's the citizenry that ends up, Jason, paying for all this.
That's the way it's been for a very long time, right, Joe? That's the way it is. And It's why I got into gold and silver. I was trying to figure out how to make all my pennies count years ago, and I started learning everything I could about what I should do with what little extra money I had at the end of each pay period. And it starts slowly, but you can build your wealth, and you can really protect what you've saved, but you have to be smart about it. If you decide to invest, you better be smart about it. And if you're saving money, you should save it in gold and silver. Even if it's just 6 months to a year, but especially if you're going to save anything that's past a year, you will make up whatever premiums you have to pay on that gold pretty quickly. And I'll tell you right now, while you're making up the premiums, because we have to pay a premium when we buy it, while you're making up that premium, well, it's not being taken away by inflation if it's just cash sitting in the bank, Joe.
Yeah, and think about it today. If you haven't started, roll of dimes today. It's $117.50. It's a great way to get yourself started. 800-951-0592. Jason and I are coming right back with the half-empty cup. And, man, the last few half-empty cups, they've been pretty darn exciting. We'll be back. Stay with us.